Asset allocation is a term that is thrown about pretty readily by investment advisors. You hear that term a lot. And really, all asset allocation means is how you have your money split between different types of investments. And essentially, here's the theory. The market moves through cycles. For a while, they love the tech stocks, and then they hate them. Then they love the international stocks, and then they hate them. Then housing stocks are in favor, and then everybody hates the housing stocks. I'm never going to be smart enough or lucky enough to say, okay, today's the day we should be all in this thing, and then quick, tomorrow, let's move out of that and move into this other thing and try to play the day-to-day vagrancies of the market. Instead, what we want to do is have exposure to a number of different asset classes at all times, because it smooths out the bumps. It reduces the chances that you are going to experience significant losses by having too high a concentration in one sector. Now, that being said, we do want to be strategic. And there are times when certain types of investments are more attractive than others. And in those times, we want to still have exposure to many different kinds of asset classes. But we want to put more into the things that look most promising going forward and less into the things that don't look quite as good. The other thing that asset allocation lets us do is it lets us control the volatility of the account. So typically stocks, and the more speculative stocks, have very high volatility, meaning ultimately you'll probably get a higher return than anything else you can invest in, but there's going to be a lot of big swings both to the upside and the downside during the interim. Bonds, particularly government bonds, typically have very low volatility. Well, by having the right combination of things that are conservative and things that are more aggressive, we can get an average, get a balance that is suitable for you and your particular situation. Developing that asset allocation is tricky. It's essentially a way of optimizing that allocation, optimizing how we split things in a way that gives us the best chances for success based on the level of volatility that is appropriate for you in your particular situation.